Hey everyone, welcome back to Corporate Decoder, the place where we always sniff out the juicy details hiding in plain sight. Today we're diving deep into COPART's annual report. Think of it as a yearly checkup for a massive company whose business is literally built on what happens after cars have a really bad day. We have a lot to cover, from how much money they're making to the risks they face. And before we dive in, if you appreciate getting straight insights from corporate documents, make sure you are subscribed. And if you want to discuss this further, join our Discord community, linked in the description below. Alright, let's talk about COPART Incorporated. This is their big annual report for the year ending the 31st of July 2025. It is like their yearly performance review for Wall Street. They're retelling investors all about how they performed, how they plan to grow, and what could go wrong. COPART is a global leader in selling vehicles, especially those that are damaged or salvaged. They use the internet and a cool virtual bidding system called VB3. Think of it as an online auction house for cars that insurance companies deem total losses or recovered stolen vehicles. They also sell to dealers, individuals, and exporters. Their main sellers are insurance companies, making up a huge chunk of their business. They processed a massive amount of vehicles, especially in the US and international markets. In fact, for fiscal year 2025, they got 81% of their vehicles from insurance companies. That is a lot of damaged metal. COPART sees their business as environmentally friendly. They say they help the planet by extending vehicle life, recycling parts, and reducing the need for new car manufacturing. By selling these vehicles, they believe they contribute to more affordable transportation worldwide, which helps communities. They also highlight their role in disaster recovery, helping to process vehicles after events like Hurricanes Helene and Milton in 2024. Now let S get to the numbers for fiscal year 2025. COPART brought in a huge $4.6 billion in revenue and made $1.7 billion in operating income. That is just the money they made from running the business before taxes and other expenses. Let S look at their revenue streams. They break it down into service revenues and vehicle sales. For 2025, service revenues were $3.96 billion, making up 85% of their total revenue. Vehicle sales were $678 million, or 15%. So they mainly make their money from auction fees and related services, not solely from buying and selling the cars themselves. Scroll total service revenues and vehicle sales, 100%, 100%, 100%, 100%. Scroll this table tells a clear story. Service revenues have been steadily increasing. For fiscal 2025, service revenues were $3.96 billion, a jump of 11.4% from the previous year, showing strong growth in their auction. And remarketing services, scroll facility operations, 42%, 40%, 39%, 39%. Scroll, when you look at their expenses, facility operations are the biggest chunk. In 2025, they spent about $1.94 billion on running their facilities, which is a lot. That is 42% of their total revenue. It is up from the previous year, and they mentioned costs related to Hurricanes Helene and Milton. Scroll total operating expenses, 64%, 63%, 61%. Scroll overall operating expenses took up 64% of their revenue in 2025. This means they kept 36% as operating income. While their expenses went up slightly as a percentage of revenue, their operating income still grew thanks to higher revenues. Scroll income before income taxes, 40%, 40%, 42%, 42%. Scroll after all operating expenses, they were left with $1.89 billion before income taxes. This is a really healthy number, showing they are very profitable. Scroll net income, 33%, 32%, 34%, 54%, and the bottom line for 2025, COPART earned $1.54 billion in net income. That is after all taxes and expenses, which translates to $1.61 per S-hair. That is a significant profit. Scroll cash, cash equivalents, and restricted cash, 27,805,31 2025 151 401 2024. Scroll. Now let's talk about cash. COPART has a serious amount of cash. At the end of July 2025, they had over $2.78 billion in cash and cash equivalents. That is a massive jump of 83.6% from the previous year. This means they have a lot of financial flexibility. Scroll operating cash flows 1799750 2025, 1472564 2024. Scroll their operations are generating tons of cash. In 2025, they brought in $1.79 billion from their day to day business. That is a healthy 22.2% increase from 2024. This shows their core business is not just profitable but growing in terms of cash generation. Scroll investing cash flows 587,448 2025, 940,079 2024. Scroll, when we look at investing activities, they spent less money in 2025 compared to 2024. They had significantly fewer cash outflows for investing, which means they weren't buying as many assets or making as many investments. This aligns with their large cash pile, possibly indicating they are holding onto cash for future opportunities or investments. COPART has a revolving credit facility of $1.25 billion. This is basically a line of credit they can draw on if they need it. What is interesting is that as of July 2025, they had zero borrowings on this facility. This means they are not using this credit line and are largely self-funding. Now let's talk about the risks. Every company has them, and COPART is no exception. One big one is their reliance on a few major vehicle sellers. While they say no single customer is more than 10% of revenue historically, a few big players make up a lot of their business. Losing one of these could hurt. They are expanding globally, and that brings challenges. Managing foreign operations, dealing with different laws, currency risks, and cultural differences are all potential pitfalls. They have operations in the UK, Canada, Brazil, Germany, Spain, and more successfully integrating these into their business is key. Since they operate online, they are always at risk from cybersecurity threats and even credit card fraud. Protecting customer data and their systems is crucial. Any breach could damage their reputation and lead to financial losses. If their storage facilities get too full, especially after big weather events, they might not be able to accept more vehicles. This could upset their sellers and impact their business. This happened after Hurricanes Helene and Milton. Like many companies, their stock price can go up and down. They mention a lot of factors that can cause this, including weather, commodity prices, foreign currency rates, and regulatory changes. They face competition from big names like RB Global Insurance, Auto Auctions, Carvana, and ACV Auctions. They also compete with big dismantlers like LKQ Corporation. The market is pretty crowded. A significant legal risk is an ongoing investigation by the US Department of Justice into potential violations of money laundering laws. This is serious and could lead to fines or other penalties. COPART says they are cooperating with the investigation. Looking at their financial statements, COPART is doing incredibly well. Their revenue for 2025 was over $4.6 billion, a big jump from last year, showing strong demand for their services. Their profit for 2025 was over $1.54 billion. That is a profit margin of around 33%, which is fantastic. Very few companies can achieve that kind of profitability. This indicates efficient operations and strong pricing power for their services. Their accounts receivable, which is money owed to them, was about $762 million in 2025. This is slightly down from the previous year. While it is a large number, it is in line with their massive revenue. COPART has a huge amount of property and equipment valued at over $3.59 billion. This includes land, buildings, and all the stuff needed to store and process cars. They've been steadily increasing this investment, showing they are expanding their physical footprint. COPART is a financial powerhouse. They are incredibly profitable and have managed to grow significantly even in a challenging industry. Their business model of using technology to efficiently sell salvaged vehicles is clearly working. The massive cash reserves give them a huge advantage for acquisitions or weathering any storms. However, their reliance on insurance companies for vehicle supply is a key risk. Any shifts in how insurers handle salvage could impact COPART. The ongoing DOJ investigation is also a cloud hanging over them, and while they say they are cooperating, the potential fines or penalties could be significant. Overall, COPART is a very strong company with a dominant position in its market. They are financially healthy and have a clear strategy for growth. The risks are present, but their current performance and immense cash position suggest they are well equipped to handle them. Alright, that is our breakdown of COPART's latest annual report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.